bulls are gaining more grounds as demand is recorded across OMO and T-Bills curves with the same sentiment recorded at the bond market in the short to mid end of the curve. Traders at Access Bank expect quiet trading today as market players focus on the bi-weekly retail SMIS auction. Odinaka Linus-Nwokonkwo, a fixed income dealer at Access Bank, joins me now for an update on the market. Thank you so much for your time today, Odinaka. And let's get into what we've seen play out in the market this week, starting from the bond auction earlier.
Yeah, hi. This week we had the bond auction. What was on offer was about 360 billion across the four maturities: 2028, 2032, 2037, and 2049. The DMO was able to sell about 662 billion out of 805 billion bid that we saw. So we saw stop rates closing around 14% on the shortest tenor bond, which is the 2028. And also 14.9 on the 2032, 15.8 on 37, and 15.9 on 49.
Yeah, but on the Naira, let's see what we see play out in the I&E window. And in terms of the retail SMIS auction, what impact do you see this having on the Naira?
We continue to see positive funds in the I&E window currently. Yesterday it closed at 362. That's a depreciation of about 50 kobo from where it closed the previous day. Today, the CBN will be intervening in the FX market through its retail auction. This is actually a usual bi-weekly auction, which they always do. We don't see it having any serious impact on when Naira is trading in the I&E market.
Okay, but I would like to take you back to the bond auction, and I'm curious to know what trends you're seeing play out going down the line.
Oh, okay. After post-auction, we saw a slight increase in yields. However, due to excess cash, the banks have the liquidity in the system, we started seeing a lot of rally on the shorter end. We saw that cash being deployed towards the 2024, 25, 26. 2024s were trading around the 8%. 2025 traded around 10.5% level. And the 26, we saw them trading around the 12% level. However, we also saw yesterday we saw the 2037 bond being trading around the 15.7, which is like almost 10 basis points below where it closed on the auction. So it was a bullish run. But today we are seeing that retracement in the bond markets as liquidity is being fizzled out in the system. Yeah,
because liquidity has been a key theme in the market so far. But looking at the first quarter, how things are shaping up already, we saw January already play out there. What's your outlook for liquidity going into the end of the Q1?
Going into Q1, for now, we'll continue to see until the cash lodgement we see continue to decrease. Remember, we have a bond maturity that is in Q2, which is in April. That's 27th of April. So for now, I think the liquidity will still be a little bit up. Also, looking at the coupon for this month is about 66 billion. Next month we have more. So we are not going to see those serious tightening of liquidity for now.
Yeah, but let's look at the performance we've seen from the external reserves. Last year we saw the reserves shed about 3.4 billion. And looking at how it's already shaping up, January we also saw some decline in that regard. And what's your take on the external reserves?
So the reserve is based on inflow and outflow. So it's just as CBN continues to do those interventions in the market and without any significant inflow into it, we'll continue to see the decline. So it's not a case of we can't really tell what it will look like in the next 2 or 3 months. But currently, it's at $37 billion.
All right, thank you so much for that. Odinaka Linus-Nwokonkwo, a fixed income dealer at Access Bank.